stock market returns are not what you think. Hey, it's Kaleb, the founder of 10 Talents Financial Planning. Did you know that from January 1, 2000 to January 1, 2020, 20 years, 2 decades, what would you guess is the average annualized return of the S&P 500 over 20 years, the 21st century of innovation, right? What would you guess? Would it be 9%, 10%? Hey, I heard a guy on the radio say 12% should be in my projection. Well, think about it for a moment. I'll give you a moment. Be thinking, get that number in your head. The S&P 500, the greatest and largest 500 companies in the US, January 1, 2000 to January 1, 2020, the first 20 years of the 21st century, if you were a buy and hold long-term investor, you got a grand total of 6.2% annualized return. Let me say that again, 6% return in the first 20 years. This was punctuated with a period from 2000 to 2012 where the market was flat, essentially flat. And then from 2012 to 2020 where we had huge returns, 13, 14% annualized. You combine them, you average it out, 20-year average return, 6%. I don't share this to scare you, but rather to bring reality to the situation. As global markets mature, as the United States economy matures, you do not want to be using rate of return in your projections. If you're a do-it-yourself investor, if you have an advisor, if you're online looking at calculators, you do not want to be using data that goes back to the 1800s or the early 1900s. It's not going to apply to you. It has nothing to do with you. What happened 100 years ago has nothing to do with your current situation. You're going to want to use real data in your financial plan, which instead of scaring us, should actually focus us on what we can control. So what can we control? We can control how much do we need? How much do we really need to live our great lives? Let's think about that, because it's probably not what we think. Let's focus on what do we need to live our lives. Secondly, how much are we saving and investing as a percentage of our income? Once we know what we need, we can decide then, okay, how much do we need to save and invest to achieve that lifestyle? These are all things we can control. We can't control the historical returns. We can't control the future returns. So instead, use an actual, more recent data in our assumptions would be a better decision. At least I think it would be a better decision to look at that, build a beautifully diversified portfolio. So if you have an asset class that goes 12 years with 0% returns, you're aware that that could happen. Stay beautifully diversified. And like I said, focus on what you can control. I think that is a much better way to go than looking at these returns hundreds of years ago that have nothing to do with you or your goals, hopes, and dreams. Thanks so much for watching the video today.